Every single time that Bitcoin has lost its bull market support band this cycle, we managed to hold on to the 50-week moving average before exploding higher. Are we seeing a repeat of this scenario? In today's video, we'll be talking about exactly this. We'll be going over the recent Bitcoin price action. And while I have been saying that it's foolish to assume that the bear market has started, it is also foolish to assume that we are in the clear right now. We need to reclaim some key levels. Let's jump right into it. First things first, on the lower time frame, you can see that we're approaching a very critical zone, and that would be this cluster here all the way up to $105,000. Bitcoin needs to confirm above 105 if we are to see continuation, targeting 107. 107 is a whole different scenario because we experienced a lot of support there, and if that turns into resistance, then things will be looking ugly. At this point in time, Bitcoin did get a nice bounce after dropping below $99,000. And I shared it on the channel, shared it in my free premium group. We also entered a Bitcoin long. It was an excellent opportunity. This is currently sitting just around $20,000 in profit. I'm also holding my Bitcoin dominance long, and all of these are traded on Bluffin. Reminder, if you want to trade with me on there, it's the second link in my description down below. There's a pretty great bonus at this point in time, 20% trading bonus cashback, where you can get up to $500 completely for free for trading as you normally would. So make sure to sign up. That's the second link in my description down below. Now, in the 1 hour time frame, you can see that we're still struggling right around this cluster, and we have several clusters to break through if we are to see continuation. In my previous video, when Bitcoin was dumping massively, I said it was foolish to assume that the bear market has started. And the reason I say this is simply because if we take a look at from the bear market bottom to where we are today, Bitcoin essentially continues to hold on to a very critical level every single time that we lose the bull market support band. Don't get me wrong, best case scenario, we can find our way back above the bull market support band, but it might take a little bit of time to get there considering the price action that we just got. So you can see here that these bands here are indeed the bull market support band, and every single time that we come back down below these bands, we end up holding on to the 50-week simple moving average. Every single time we've tapped into it, we ended up moving much, much higher. As you can see here, break below the bull market support band, hold on to the 50-week moving average. Break below the bull market support band, hold on to the 50-week moving average, which is, of course, if you can't already tell, this green line. Once more, it happened here. Massive break below the bull market support band, holding on to the 50-week moving average. Now you can see here that we are getting close to the end of the cycle, in my opinion. I firmly believe that 2026 will likely be a bearish year. Whether or not we top right at the beginning of the year, that I'm not so sure quite yet. However, if I'm assuming that the top is not in, we don't have that much time at these current price points. And so you can see that in this recent price action, we did indeed once more lose the bull market support band, which is found right around $112,000. Right now, we are trying our best to hold on to this 50-week moving average. So, in my opinion, if we are to see continuation, it would stem from around this zone. But don't get it twisted. There's been several times where we've wicked to this zone and then ultimately ended up wicking there again before getting that extra confirmation for us to go much, much higher. Remember what my invalidation level is to assume that the bear market has officially begun. That would be some weekly closes below $98,000. At this point in time, we got a little bit of a relief rally. We're just under 103K, and this 50-week moving average is right at 103K. We need to hold on to this level if we are to see more upside. Now, from a risk to reward perspective, obviously I entered a Bitcoin long right around those regions. By the way, if you want to know all the trades that I am personally taking in this market, you do have the first link in my description down below. You DM me the word premium, and I would be happy to onboard you in my free premium group. If you've already signed up with me on Bluffin, BTCC, or Weeks, and you're actively trading crypto on there, you are eligible to join that group. If you haven't already, might as well go ahead and sign up, make these your main trading accounts, and then you get access to my own personal setups. So I want to see Bitcoin first and foremost confirm back above $103,000. But I am not writing off another move down, potentially to form a double bottom. That is what I would be looking at. Usually, when we tap into these massive zones, which provide either the invalidation for the entirety of the cycle or the crucial support zone, we tap into them several times. So I don't think we should assume that that was the confirmed low quite yet until we can confirm above higher levels. For me, that level would actually be around $107,000. The reason why 107 is so significant, if you remember correctly, is because it was our previous pivot before we made brand new all-time highs. So you can see here right around $107,000. This is what essentially set the tone for us to explode up to 126K. And then when we started losing 107K on a daily time frame, I knew it was no good and that we would see further continuation to the downside. So best case scenario, we get to the point where we can go ahead and reclaim that level. Then we should be seeing more upside, and I would be more comfortable in saying that the confirmed bottom is in. Right now, this is starting to look pretty decent. However, as I just showed you on the 1 hour time frame, there is a lot of resistance boxes ahead. And right now we are struggling right around our first resistance zone, which finds us at $105,000. We made it all the way up to 104.5K. So if we cannot confirm back above 105, then there is a strong chance here that we can go ahead and roll over, potentially forming a more significant double bottom. Now remember, the invalidation for me is weekly closes below $98,000. However, there is always a chance that if we do make our way down, we end up sweeping up this liquidity before getting a bounce higher, assuming that the bull market is still on. I will gladly shift my stance once we get those confirmations below $98,000, and my strategy would then pivot to shorting relief rallies. However, from a risk to reward perspective, I explained why I went long. It was a pretty obvious level to go long. It feels like everyone was actually eyeing that level. But the interesting thing is, despite the fact that everyone was eyeing that level, we're seeing that longs are essentially scared to enter the market at this point in time. You can see that on the 30-day time frame, this is what the Bitcoin exchange liquidation map looks like. There are no massive clusters here. Typically, when we've been getting these dips over the past couple weeks, we would always have one or two massive liquidation spikes, and we would go ahead and grab that liquidity, obviously. At this point in time, it's relatively stable, and there's not a ridiculous amount of liquidity, which there was so many times before. Most of the liquidity, as you can see, is to the upside, grabbing those shorts. There's around 14 billion worth of cumulative short liquidation leverage in the market, and on the left here, there's around 3 billion worth of cumulative long liquidation leverage in the market. So we're basically looking at over a 4x. Interestingly enough, if we take a look at Ethereum, it paints the exact same picture. So much short liquidity to be grabbed. That being said, we cannot ignore the fact that there is a chance, for example, for us to come back down and grab some of this liquidity. This is on the 1-day time frame. You can see that the longs are starting to pile up, but if we really zoom out, this is really what I'd like to see. Not many aggressive longs entering the market. So make sure that you zoom out and take a look at the bigger picture, but also if you zoom in, this is where you can assess where those liquidity zones are. On the 7-day time frame, you can see that there is indeed a massive cluster of cumulative short liquidation leverage right around $108,000, but we need to reclaim 105 if we are to see continuation. Now, I also wanted to talk about Ethereum because in yesterday's video, while I did mention that Bitcoin will determine the rest of the market, and I still firmly believe that to be true, and that's also why I'm still in my Bitcoin dominance long trade, Ethereum is looking relatively interesting. If we do get a more significant bounce from this zone, this key zone for Bitcoin, I do think that Ethereum could potentially be moving higher faster than most people are expecting. Remember, we broke below this key range, which was essentially established all the way back in August, but now we ended up confirming back above. Naturally, we need to see what Bitcoin does, but this is a pretty good start for Ethereum, in my opinion, on our way to reclaim the range that we were just in. And if we take a look at the Bitcoin dominance chart, guys, how many times do I need to repeat myself? Still think Bitcoin dominance will go up, irrespective of the price action of Bitcoin. We got a little bit of relief across different altcoins on this bounce, but for me personally, until Bitcoin can reclaim higher levels, I am simply not looking to trade altcoins. Maybe some scalps here and there, but in terms of swing longs, absolutely not. Because if Bitcoin, for example, does dip down to below 100K once more, tries to form a double bottom perhaps, then altcoins would completely get annihilated once more. You know how the story goes. USDT dominance. I thought that this was very, very interesting. We haven't talked about it in quite some time. This is the weekly time frame. We've been holding this structure for quite some time, since all the way back in 2017. And right now, you can see that it's no surprise that we got a bounce from our key level of around 4%, which marked the local tops. So in an ideal world, what I'd like to see here is for us to actually have that as the top. So maybe we get another wick here for USDT dominance, but ultimately for the last leg of this bull market cycle, you want to see USDT dominance going down, which is of course bullish for the rest of the crypto market, and it would see us potentially go down here one more time. But I am not discounting the fact that we could easily have another wick lower beforehand. However, it's forming lower highs on this chart. If we start breaking above this level, then you can imagine how bearish this would be for the rest of the crypto market. Also, taking a look at this liquidation heat map, I like to talk about this one from time to time, but you can see that in the past 24 hours, there's quite a lot of liquidity piling up on both sides here. We have some shorts all the way up to where we essentially got rejected, 104.5K onwards, and we also have some longs that tried to come in right around 102K. What I really like about my current positioning is that I entered right around $100,000, just above 100K. Shared this in my premium group when everyone was freaking out. But the point is, now I'm relatively stress-free. I have my stop loss at break even. So if we decide to move lower, I will simply try to re-enter on another double bottom. However, if we move out of here, I have that exposure to the market. That's how you should be trading this market, in my opinion, of course. So we have liquidity on both sides. You can see that on the 30-day time frame for Bitcoin, things are looking quite decent to go and grab that short liquidity. However, we need to pay attention to the shorter time frames, at least for now, because there are people trying to pile into longs here. It's nothing drastic quite yet, but just keep your eyes on this. And taking a look at the ETFs, something to consider here is that we are starting to see the outflows significantly reduce, but it's very, very interesting to see how BlackRock are playing this. Obviously, it's BlackRock's clients, but the IBIT ETF, which is BlackRock's, ended up selling a lot yesterday. Meanwhile, the other ETFs did see some significant inflows, but overall you can see that the outflows appear to be slowing down. I would like to see some positive inflow days from the ETFs at this point in time. Same thing for Ethereum. Outflows have started to slow down. However, on this little relief rally, the BlackRock Ethereum ETF ended up seeing more outflows. So interesting how they're playing this market. And not to add any FUD to the market, because we already have a ton of that, but I do think that this should be on your radar. Bitcoin treasury company Metaplanet looks like it's struggling a little bit. The company owns just under 31,000 Bitcoins at an average acquisition cost of 108,000 per Bitcoin. Technically speaking, they are underwater. Rather than cut their losses like any good trader would, the company is doubling down, raising $100 million in debt to buy more Bitcoin and lower their cost basis. Perhaps they'll use the cash to engineer a little bit of a short squeeze here. If Bitcoin treasury companies are getting wrecked with Bitcoin at around 100K, what happens if Bitcoin goes to $40,000? The NFT craze of 2022 offers a clue. 3 cheers for the ongoing Ponzi implosion. Look, I don't think that it's necessarily that bad at this point in time, but it's something we should definitely be aware of, and we talked about this on the channel previously. This could be the downfall that ends up sending Bitcoin into a bear market. But at this point in time, we are still confirming above key weekly invalidation levels. And I also wanted to touch on MicroStrategy simply because we just touched on Metaplanet. You can see that they're still technically up 40% on their Bitcoin purchases. Their average cost is from $74,000. However, it seems like every single time that we form peaks, Michael Saylor buys a lot more Bitcoin. When we're in these periods of downturn, look at the dots on this chart. You can see that they are very insignificant buys. We'll have to see how this plays out, but ultimately these Bitcoin treasury companies will be very, very interesting to monitor as we head into a bear market. And to be perfectly clear, I do think that we will likely get a bear market where Bitcoin should be dropping at the very least 50%. I know we've been seeing time and time again that in the bear markets, Bitcoin can drop 80 to 90%. However, with all of these institutions involved now, the ETFs, I do think that the correction might be a little bit less severe than most people are anticipating. Let's see how it plays out. I still think that we have a good chance of having that last leg so long as we don't start confirming below $98,000. And that sums up today's quick video. Bitcoin got a very nice bounce from sub $100,000. We entered that position because it's a solid risk to reward setup. However, there is a chance here that we get rejected at $105,000 to go ahead and potentially form a double bottom. I would be seeing that as an opportunity. If we start to get weekly closes below $98,000, I would say that it's invalidated, and my strategy in this market would be pivoted to shorting relief rallies. Now, we're also trying to break above $103,000 and confirm above there, which is the 50-week moving average. If we can stay above there, that is typically the support zone that we hold on to after losing the bull market support band before going ahead and moving higher to the last stage of this cycle. If you enjoy the content, make sure to smash that like button and subscribe. I have my bluffing tutorial linked right here if that interests you. And of course, I'll see you in tomorrow's video.